We're back with another 3 stocks that have caught our eye, especially as June ends. We do not own any shares mentioned on the video, and of course, none of what we say should be taken as financial advice. If you need that sort of advice, please speak to a professional. Alright guys, by the time this video comes up, we are pretty close to the ending of the first half of 2023. It's been a wild ride, and I suspect the second half will also be equally as wild. And sometimes that can cause a little bit of uncertainty, especially with the volatility, news of war, interest rates and things like that. So if you feel like you don't really have a handle, or you're not so sure what you should be doing with your money in the second half of 2023, then you need to hop on to our top investment strategies second half 2023 free training. Link is in the description and the comments below. So the 3 companies that we'll be looking at is, surprise, surprise, is Top Glove again. Number 2 will be Betamag, and there's a potential hidden gem in KTC. We shall see. Alright, so let's start with Top Glove. So Top Glove, you know, it had a very nice run year to date, but it's down nearly 17%. And what in the world is happening?
Yeah, so they recently announced their latest quarterlies, and yet again they are making losses, although the loss has been shrinking as compared to the preceding quarter in quarter 2 2023. So it actually managed to minimize about 34 million, but then sales has been still dropping as usual. And so if you can see in a quarter-to-quarter basis, right, the losses on the operating expenses right now, it is somewhat increasing as compared to the revenue, the increase in revenue. So if you notice in the previous corresponding quarter, right, revenue, there is somehow like it's managed to outpace operating expenses, but for this particular quarter, they weren't able to make as much money in the top line. Okay, so there's a few interesting things that I depict from their balance sheet. So number one, we can see that their inventory has reduced, which is a good sign. More sales are more inventories are converting into cash, so that is good. Number 2, it is that the non-borrowings, they actually managed to pay down a lot of loans. But then you notice that the short-term borrowing actually start to trickle up. Yeah, I think it's have to do with the working capital that they need to like service. So they actually start to like get a lot of these short-term borrowings. But all in all, their cash actually managed to increase about 37 million after like multiple quarters of actually burning cash. So that is actually a pretty decent sign. Cash flow wise, yeah, because they managed to reduce the inventories and also some of the receivables, so that's why you can see as a positive operating cash flow for that particular quarter. Now, that's actually a very short take, but just want to share you guys a few takeaways. So number 1, they did mention that average selling price has been increasing, but the increase in price has resulted a decrease in sales volume. I mean, that's kind of expected, right? Because when you start to increase prices where you thought that you can still get it at a cheaper price. I mean, you still can get it from Inco's factory. That's the reason why their sales actually start to drop.
Yeah, it could be that also now people just have less need for gloves.
Yes, exactly. Yeah, that could be the case. But then there's a few signs that they are starting to like restructure their operation. So number 1 is that they start to decommission, I believe, like 17 out of 49 factories. Right. So it's going to reduce their production capacity from 100 billion pieces of glove to about 95 billion.
Yes.
Not only that, they also start to lay off some of workers. So they are planning to like reduce like 600 people from their factory. And also they hint a few positive signs. So number 1, raw material for nitrile and latex glove has actually dropped quite a bit, like I believe like 10% to 15%. And then they also expect that natural gas will start to drop about 11% in July 2023.
Right.
So there's a lot of like these cost of operation is going to drop. So maybe in the next quarter, we can see either the loss will shrink even more, or we can start to see signs of profit making in the next quarter. But the only downside is that the China's plan, so we're not sure whether how aggressive is China going to expand their production. If let's say they still want to like kacau, they still want to eliminate some of the players, right? I think they will keep price at low.
Yeah.
Or they will like expand. I don't know.
That's the China style, right?
Yes, exactly. So right now we are actually playing a game theory with China. So whatever China is doing, then the Malaysia player will start to like react lah. Yeah, but right now Top Glove is trying to like show signs of like, you know what, I'm gonna start raising price. So we see whether you follow. You want to follow or not lah. Yeah. So yeah, that's it for Top Glove. Any final comments?
Nope. But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
Okay, so next one. Betamag has been a company that it is down 18.97.
It's a very unloved IPO. I'm one of the few shares that I managed to get as well. Sold already. But it's quite, I don't know, I was left very positive, you know, after the meeting with the management. We had like a Zoom session, and you could sense that they were riding on car electrification, but in a different way. It'll be like your systems within the car.
Exactly. But if you look at recently, they actually start to show signs of positive because it is up like 4%. Although it's small, but it's still up lah. The reason why also is because they announced a good quarter results for the quarter 4 2023. And the reason why they managed to get such a good profit is because one, profit margin for gross margin specifically has been increasing because of these raw material prices are going to normalize, and also there's a stabilization on these forex. And let's say if you exclude all of these, the one-off non-recurring listing expenses and other costs, right? Profit actually managed to increase about like 26% as compared to 140% increase. So that is a very small kind of like review on their performance. And prospect-wise, they are still aggressively spending on R&D. So that is surprising. So as of like March 2022, they actually spent about 10.4 million on R&D. And if you look at their proceeds from their IPO, right, they haven't really spent a lot on the R&D proceed for this new product development. I believe this new product development has to do with EV or some other industries. Yeah, that is why they didn't really touch the balance yet. Yeah, they're still waiting. And if you look at the other plans, right, they did mention that they want to diversify into healthcare and medical devices. And also they did like sign an MOU with this China company to venture into this EV from Shenzhen Zhonghong Technology. Yes. So yeah, there is two directions that they can go. One is EV, the other one is healthcare, which they say that is somewhat requires a same level of quality and standard as compared to what they are currently doing. So it's more like a horizontal integration. Yep. So that is Betamag. So a few takeaway. Number one, I think the valuation right now is actually pretty attractive. At a 13 times PE. I mean, it's better than when it was trading at that 20 times. So yeah, that is pretty interesting. And then diversifying into healthcare and EV, that one is still in talks. It's not really executed yet.
But it's the right industry, right? I think that's the key.
Yes, correct. Yeah, we shall see whether these two industry will bring more positive contribution to the company. I hope it will. And number three is that if they manage to execute these two, right, manage to tap on those industry, their TAM will be actually expanded lah. Not only just relying on Perodwa's sales growth, you're also going to be relying on EV, you're going to be relying on healthcare's growth. So we shall see. I think so far Betamag is on the right direction. But the numbers, we shall see in the next few quarters whether they can deliver.
Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback, as long as they're constructive.
And the last company, KTC, I don't know what it stands for, but we shall see. So it stands for Kim Taek Cheong Consolidated Berhad. Yeah,
Double in the past year.
Exactly.
Less than a year.
So this is a company that I believe not many people actually even pay attention or notice. Obviously, number one is it is a below 200 million market cap company. Yeah, and number two is that not many analysts actually covered or talk about this company except for Rakuten recently only. So we shall see why it managed to go up 96% over the span of I would say like 10 months.
Yeah.
Okay, so
sales doesn't. Okay, it's a slight increase in sales.
Yes, very
Profit
steady.
looks similar.
But it's actually better than the
definitely.
IPO and everything. So we can see like there's a trend of them starting to move at the right direction in terms of profitability. I think that is the reason why share price also almost doubled in the span of 10 months. I'm not going to comment much on this. I just want to show you that this business is actually very, very steady. Revenue and profit, everything is on a smooth trend going up. Their balance sheet also has been very okay. Don't be so surprised on this amount of loan or borrowings in their short term. Reason why they have so much of short term debt is because they are in a F&B industry, and this industry, right, and as a distribution for this kind of industry is actually you have to go according to what the principal says.
Yeah.
So if let's say basically the principal is controlling this company's direction.
I think it's also less riskier on average compared to others, simply because the goods that they distribute is fast.
Yes.
Right?
Exactly.
So the debt is like, you just need that amount of debt for that few amount of months just to buy whatever raw material you need. And then or whatever goods that you buy, and then you just distribute it. So this kind is, not sure what's the right word, but it's really not that interest bearing. There is interest, I'm quite sure, but if they clear it within a few months, it's really not that big of an issue.
Yes, exactly. And I actually don't expect this company to turn a net cash. I believe
and doesn't need to, that's the beauty.
Yes, exactly.
Because I'm guessing the cash flow is pretty decent, right? That's true
yes, exactly. It has been pretty positive for the past few quarters. So that is actually a good sign for KTC. Now, as to what business they actually do. So just now we hinted they distribute consumer packaged goods or fast moving consumer goods, and they also make some bakery products as well. I believe you guys who heard the name before. What is the name already? Is it Massimo? Oh, Gardenia. Sorry, Gardenia. Yeah, Gardenia. Yeah, exactly.
Wow.
So they are the maker of Gardenia and also Cremos, I believe. I have not tried Cremos before, but Gardenia, yes, I have tried. But yeah, so they are just a distributor for foods. And right now, majority of the sales coverage actually comes from the East Malaysia. So Sabah and Sarawak, actually. Yeah, so that's it. And this is actually a report from their prospectus. You cannot find it in their quarterly or annual report. So majority of the product that they ship or distribute is actually comes from condensed milk, condensed powder and evaporated milk. And then followed by all of these small little products like biscuits, bread, chocolate, snacks, and all those stuff. Now, final takeaway, yes, just now we said that they are the maker of Gardenia and Cremos, if you guys didn't know. And they are, right now, they're actually planning to transfer from an ACE to a main market. I believe
that might be the reason, right?
Yes, yes, exactly. And also because of profits also going up.
Yeah.
So I believe if you see today's video, it should be up already. I believe they announced like on the 15th of June, they will be in the main market, if I'm not mistaken. And this is a business that is very steady and revenue, and it's also one of the companies that the characteristic that we actually look for in FirePro. So we shall see whether KTC will continue to deliver such numbers in the next few quarters. So that is the 3 stocks for June. And before you guys go, just want to show you guys the Pro portfolio as well as the Telegram portfolio. I think we have talked about this multiple times already in our past videos, so I think you guys know what it is about. But if you guys don't know, you can actually join our free webinar, because we're also going to be talking a little bit, or actually a lot, on FirePro. This webinar is totally free, and we actually have about like 500 people.
There's a limit.
We set a limit.
Yes. So guys, The previous one had, I think, total of close to 600. Right,
around there.
So a few people unfortunately couldn't attend. So do it fast. Totally free. Links are on the comment description, as you probably know from earlier in this video. But yeah, guys, if you want to check out more on Fyro Pro as well, and you want to know what's inside it, or get a taste of what it's about, you can always check out our free sample. And guys, always thankful for you to stay all the way until the end. Thanks for the support, and I look forward to seeing you in the next video.